Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone's doing well. We have a lot of data coming out this week. Today we got some unemployment claims. These are not usually a major economic event in terms of, well, especially in a week that we're going to have non-farm payrolls. This is the weekly jobs number that comes out Thursday at 8:30 a.m. Usually there's a mild response, but nothing really to, I would say, upend any trading plans or alter any risk management or profit targets, things of that nature. So let's see what we've got here today going into NFP. And just a quick reminder about what non-farm payrolls means in this post first rate cut environment, in this dovish cycle that the Federal Reserve is certainly committed to at this point. First of all, the constant measuring of inflation is not as important. So PCE, CPI, will always be important macroeconomic data releases, but they're not the same impact as they were when we were waiting for those magical levels that would get the Federal Reserve to finally act. So that's not as important. So that would include PMI numbers, things like that. All right. So PMI, PCE, CPI, that alphabet soup. What's happened is those have really been supplanted now by consumer behavior. Are they employed and are they buying stuff, including homes? And that's really been where now we want to keep an eye on the data. Unemployment claims, not as important. So if we were to think about employment releases, this is the way I look at it. Number one is non-farm. Number two is JOLTS, the job opening. Number three would be that weekly claims. And then there's a private Challenger Gray and Christmas number that is also an interesting job data point. So those four would be good to keep an eye on if you're trying to get a read for whether or not the Federal Reserve is viewing their second mandate, which is employment, as something they need to continue to work on. All right, that's where we are, gang. There's a lot of chop and uncertainty as we go into October. It doesn't mean that we can't continue to grow our accounts. It doesn't mean that we can't continue to find opportunity, but it does mean we have to be fluid in where we're looking for the opportunity. So if we insist on waiting for that next great magnificent 7 setup, we might be waiting. However, a lot of folks ask, Rog, you haven't been trading tech that much. Oh, that's not necessarily true. There are two symbols that have been in pretty steady rotation in the sector secrets mastery as of the last month. And one is consumer discretionary, and the other is Amazon. We've been in and out of these now. And actually, Amazon, if we can continue to sink back towards this, so take a look. How many of you out there checked out the webinar from yesterday? Who was with me with the webinar? We have a class coming up day after tomorrow. The class is on Saturday. Super stoked about it. And you probably learned a little bit about the tools that I use. One of the questions that I got, and I love when I get this question, is, Rog, can I learn this? There's always so much hesitation as to, you've been doing this a really long time. I want to be able to do this and do this well, but can I learn this? And I truly believe traders are made. They are not born. Yes, some people have a little bit more of a risk tolerance. My risk tolerance is actually very, very low. Some people really like to sling trades. I don't actually like to sling trades. If someone were to look at me and my mental makeup and go, gosh, is this a trader? They'd probably say no. Now, 32 years later, it's just not the sort of usual trader makeup, that aggressive, take risk, bet the farm. In fact, that's not trading at all. But some of us think, gosh, if I don't have those qualities, I can't do this. If I look at two of the greatest in their genre of trading or investing, Warren Buffett, Jim Simons. And one of the things that a lot of folks said, well, Rog, we heard you say you've never blown up an account. You say that's not a rite of passage. Doesn't every trader blow up an account? I don't know. Has Warren Buffett ever talked about blowing up before Berkshire Hathaway started going? No. Has Jim Simons ever talked about blowing up before Renaissance Tech became the juggernaut and the legend that it is? No, because they didn't. You can read about both their stories. They haven't. Why? Because both those men in their completely separate fields One's a long-term investor. One was a short-term trader with about a 2 to 10 day time horizon, which is what I do in the mastery. Never blew up because the very first thing they thought about in the morning was, how do I manage risk? They'd call in meetings. How do we manage risk? Are we risking too much, right? What's our risk on return? And those are things that when you align to first, well, no one's going to question their account growth, are they? And so that's where we have to just kind of turn the conversation on its head. No, it doesn't need to be complicated. In fact, with the kind of tools we're seeing, let's talk about Amazon for a moment. Does everyone know the gray zone is support? Right? I'm looking at both the screens here. Does everyone see this is a trend? Look at the bottom of my chart there. Right? Green over green means what? Bullish momentum and bullish trend. I'm trying to grab my drawing tools here. All right. So if you're ever wondering, Rod, your charts don't quite look like other charts I've ever seen. Why, thank you. That's number one. Structure, right? What's the current underlying structure? What are the probabilities of follow through to the upside? In the case of Amazon, pretty darn good. All right. What are the colors of the candles? They're mostly green. Green means go long, right? So after a pullback, would my expectation be for at least a revisit of recent highs or maybe punching up to new highs? Yes, they would be. All right. Then where are support levels? Well, I've got a mean reversion zone in the what we call the wave, the top tier wave. And I've got the daily price movement range, which is a volatility-based support level. So yeah, there's a lot of reasons for me to think that this is going to be a setup that I want to watch. Now, just in those few seconds, you go, oh, okay, Rog, when we take a look at the next chart, let's take a look and contrast Amazon with Apple. Let's just stick with the A names. All right. Do we have a trend in Apple? We don't. Do we have support in the gray zone? Yes. Right. Are the candles mostly green? No. So right away, could anyone say, Rob, is it Amazon or Apple that I want to trade? Which one? I think everyone knows if I'm looking for continuation, if I'm looking for follow through, which by the way is the thing that most traders are not thinking about in terms of where maybe the weak link may be in their account growth, because they're focusing on maybe, what's going to happen with semiconductors next. Look at semiconductors, look at consumer discretionary, or even industrials, or even utilities. Do semiconductors look all that interesting? This is where the wheels are coming off the wagon. So if the base of growing an account is stop losing money, stop making dumb trades, right? Stop blowing up accounts, just stop losing, or at least when you do lose, I don't want to say stop losing, but when you do lose less than you make, right? So lose less than you make, and preferably lose less often than you win. All right, that's basic stuff. But the next part of it is which symbols have the probability of continuing to move higher when you get long, or continue to move lower when you get short. It's not, look, it's not just about long positions. If someone said, Rod, what can I short? Oh my gosh, short Boeing, right? That's been a pretty easy sink from 165 to 150. So this works with downtrends too. So keep in mind, if you're looking at the wrong thing, and how do we define wrong? Wrong meaning something that is not likely to continue with good probability in the direction in which you entered, right? XLU is fantastic. XLI, fantastic. So these are things that other traders typically are not going to be looking at because they want to know what happens with NVIDIA next, right? So part of account growth is that middle step number 2, which is, what am I trading? Am I spending a lot of time being very purposeful about what is on my chart and what I'm setting up? And I'm sad to say most traders don't, right? They're going to follow whatever the big headline is. How do I get into Chinese stocks? Time will come, right? The time will come, whether it's FXI or MCHI or JD or PPD or whatever, the time will come. But am I going to chase this stuff higher? Or am I going to buy dips in something that's been trending for well over 2 months? You see the difference? And then traders step back and go, oh, why am I not growing an account? It's because I'm buying options, not selling them. It's because I don't have this indicator. It's because I'm trading the wrong type of market. I really should be in futures or Forex instead of stock. That ain't it. Find things that are moving higher and then have a process for finding them and following them. And that's where, when I get questions about, Rog, how do you figure out what to trade? I would say trading really is 80% what to trade and then 20% actually trading it. All right. Okay, so let's see here. Questions. Good morning. All right. So thank you. Will the SPX be day traded in the mastery? Fuzzy, yes, but look, it's a very fast moving. The decay on it is rapid. The timing on it is really specific. Yes, I will be, but you've really got to know how to trade it, which is why we're doing a class on it. Because while we're doing all the other trading, we're doing day trading, swing trading. It won't be like I can put on a mini little workshop on here's how to trade SPX. So that's why we're including just a bonus of it in the class. But yes, I will be doing it in the mastery room. But it will be really important that we understand really when to trade SPX. It's not an everyday thing. I think one of the things a lot of SPX traders have learned over the last year is, yeah, it's a really cool market. But if I think I'm going to SPX trade all day, every day, say bye-bye to your account, right? It is just going to melt. And it won't be pretty. So the main thing is know that it's one symbol of many that we'll consider, but it is a very cool setup. You saw just a couple examples of that. And then on the risk side, it's very manageable on risk because you pretty much know not too long after entry whether it's going to be one of those days where we get follow through or not. And if you understand the timing of that window of vulnerability of, okay, I've gotten in, I'm managing risk first before I start managing reward. How do I know without risking max debit, without doing all these spreads, which of course have pattern day trading rules, which means you could only put on so many trades per week. So there are some things that are going to be nuances that everyone will have to learn, but yeah, for sure. Is it available to watch? Yes. If you go to simplertrading.com/reliable replay. Hang on. I think I have it. There we go. In case you missed it, there it is. simplertrading.com/reliable-replay. And I'll show you a bunch of examples, show you how we've been doing in September and August. Yes, we've had losses, right? So one of the things that you'll see is in that, of course, I'm plucking out examples of individual trades, but we start off the entire conversation of here are all the wins, here are all the losses, here's the P&L curve for the entire account. Right. And then you get to step back and go, okay, account growth, check. August, yep. September, yep. 2 choppy months, sure. Because if we start trading like January, February, March, look, everyone makes money in those environments, right? It just went straight up. And as long as you're not fighting it and being a counter trend trader, which is really just some sort of deep-seated self-loathing, in my opinion, as long as you're not doing that, everyone can make money in trends. But what happens when we're moving kind of like the way we are right now, which is sort of this bullish chop? So you'll see the whole picture there in the webinar. Thank you very much. I appreciate it. That was a fun one to do. And, big shout out to the Trish Boss. For those of you that don't know, my partner here in the Florida HQ office. It was a great slide deck. And a lot of you said, Rog, I learned a lot just in that webinar. Wait till you get to the class. All right. Danny asks, I hesitate to even ask you. Oh boy, now I'm nervous, Danny, to read the question. I know the answer is trade what you see, not what you think. Okay, that's good because that's true. Classic Ragheeism. But thoughts on the port strike. Here's my thought. Yesterday, I walked from my house over to this house, which is where my office is. And this is where my mom lives. I work basically at my mom's house. So I walked from my house over to the house. And the first thing she told me, Danny, she calls me Babu. Babu, make sure you buy toilet paper and paper towels because they're going on strike and you may not be able to find them. So I'm not sure if I'm going to walk over to my local Publix and find no toilet paper on the shelf. That's all I know. And Danny, I know I'm sounding a little silly, but that's all I know. Is it a good thing? No. But all I can do is exactly what you said. Trade what you see, not what you think. Because whether it's port strike or missiles launched, and we've had both these unfortunate things, whether it's hurricane, whatever that fill in the blank awful thing is, obviously it's going to be tough. But we live not in the economy, we don't live in the culture, we live in the charts. And that's really hard because sometimes these terrible things are happening, but you got to put the blinders on and just say, is price responding? Does, as they call it, Mr. Market, care? And how is the response? So at the end of the day, you're right. Trade what you see, not what you think. And then you start to ask yourself, what businesses are most affected by it? Gosh, what won't be? But I don't know that I'm seeing a lot of response to it. We have a lot of chop right now. So clearly, whether it's cruising on into the election, whether it's the beginning of Q4 and the uncertainty about just how aggressive into 2025 the Federal Reserve is going to be cutting rates. All those things are kind of up in the air. And as we can see, this first week of October hasn't been dramatically bearish. It's just not as bullish as it was. We're going into non-farm payroll tomorrow. It's amazing how quickly all those other things might fall to the background if that jobs number is good. Again, we don't live in the real world when we're trading. And it's a hard detachment. We're jacked into the matrix. Okay. We are not living in the real world, or as they say, the stock market is not the economy. So you got it, Danny. I have no idea. My mom told me to buy toilet paper. That's all I'm going by right now. And the charts will tell me the rest. So I know it's not something that the news is going to say is unimportant. The news is going to bombard us with it, right? The news is always going to bombard us with negative things. But I would say keep an eye on utilities, keep an eye on gold, keep an eye on industrials, keep an eye on those things that are moving higher. Staples are not as stable as I thought they were going to be as we come into October based on the trends we saw in August, September. So it's a fluid watch list. But when I look at my current open trades, we've been even trading things like Cisco right now. So go figure, follow the trends. And that's where that watch list has to be coming from. What has the possibility, the probability of falling through? So Kenneth asks, what's my process for finding trending stocks? Kenneth, I have a series of steps that I take. It starts with something called alignment, which is I'm looking at the best stocks within either the index or the sector. So I look at this alignment process. Then another way to make it really unbiased, objective, and I would say even more accurate is I have a series of indicators that I look at. And I just look at the colors. So for example, Cisco. Why am I long Cisco? Green candles, green trend, green momentum. So I look for those kinds of stocks. And then that's what I focus on, Kenneth. It's really just that. It's that straightforward. So these different indicators are things like the daily price movement range, all the things we talked about in the webinar. So if you didn't check out the webinar, a lot of you that are wondering, Rog, I've been following you here on Charts and Coffee, but what is it that you're looking at on these charts when we ask you questions that gives you the confidence to say we want to get long? Yeah, Dave, you mentioned XLB. Yeah, that's another one that I definitely want to focus on. That's another one. Okay. So if you want to check out the webinar, there's the link. It's right on the screen, reliable-replay. And I'm going to jump into the Sector Secrets Mastery Room and see if we can't find some trades. But remember, it's okay to be patient today. It's okay to be patient today as we go into non-farm payroll tomorrow. Let's see. Any thoughts on... So, Leslie, I'm zero interested in NVIDIA. We mentioned that earlier. There's so many other better places to look. CRM is not too bad. But in terms of those three stocks, no, none of those are on my radar. I'd say of all the three that you just asked, Leslie, keep an eye on PLTR. NVIDIA, semiconductors, woefully lagging some of the other strength corners. CRM is okay, but PLTR would probably be as bullish a structure of those three stocks you asked me about as I can see. All right, gang. There's the link right on the screen, simpletrading.com/reliable replay. In that webinar, in the first 30 minutes, you will learn about the indicators on my chart and what they do for me and how they help me make the trade. So check it out. And if you haven't already, make sure you check out what we're doing this Saturday. It is a jump start to everything we talk about here in Charts and Coffee. It's a jump start to, well, frankly, what have been quite positive returns. 37% in August and just under 50% in September. I'll let you know how we do in October. Hopefully you'll join us and you can see what we're going to do and join me with those trades this month. All right, gang, be good to each other. I'll talk with you soon.